Football season in the United States has begun here, and we wanted to bring up one of the most controversial stocks from 2023, ticker BUD, AB InBev, and that is the parent company of what used to be the best-selling beer in the United States. That's Bud Light. Let's take a look at the stock chart, see what it's done. Really want to point out here this April time frame right here. This is where all the controversy pushed in. Stock is almost back to that level. Essentially has gone nowhere over the last 3 years. Potentially could be a fantastic buy here. Let's take a look at the numbers. A couple of quick charts we wanted to put up for you here. First of all, you can see Bud Light has over 10% market share here in the United States. Huge dip on the controversy. Modelo is beating it out. Fantastic things happening here for other companies as they give it away. And here's the other piece we wanted to take a look at. We love names inflecting higher, meaning revenue growth is higher than expectations. When is the bottom for Bud Light? Looks like it already happened. Looks like we have troughed in the negativity towards Bud Light. Should at least, do okay from here. Maybe could do great. Let's take a look at the numbers and see what that means. All this controversy at Bud Light, right? It should be cheap. Shouldn't the company be cheap? Let's take a look, see if it is. First of all, one thing to point out, the company is fairly highly leveraged. It bought all these brands up like Goose Island. It had to pay a pretty penny for them. That comes down here in the debt pile. Why is that important? These debt holders all stand in front of us, the equity holders. This company is 4x leveraged. Not terrible, high end of what we look at, and those people are staying in front of us. We really want a cheap valuation outside of that. Take a look at the other valuations. EV to EBITDA is fairly affordable at just 10x. We love sub 12x. Net income, however, to enterprise value, 31x. Why is that? They have to pay a lot of debt. So that EV to EBITDA, it's cheap. Net income, it is not cheap. Free cash flow yield here, about 4.5%. That is a decent valuation. So we don't see that this thing is overly cheap. We don't see a valuation reset at all. So if you're going to buy this stock, you're going to want to see revenue growth above expectations. Revenue growth expected this year, just 3%. That's great, really low bar. If Bud Light can do great, they can probably move this up 4, 5, 6%. The street is not looking for that. It would be a positive inflection, maybe a decent trade here. However, this company is massive, and even taking back a couple share points on Bud Light, all of the other negatives that are going in the beer market right here are kind of working against it. It is not a high growth market right now. Seltzer is, beer is not. They don't have a great offering in that case. All of these things that are working against high revenue growth for Bud need to be countered by Bud Light coming back. And if it's too slow, this just isn't going to revalue itself higher in our opinion. So we don't see a ton here. It could be good for a trade if Bud Light can really nail a couple of quarters here during football season, but outside of that, not much compelling about Bud here at these prices. That's it from us on Bud. Let's see if Bud Light can turn the corner this football season. Looking forward to it. Hit us with any questions you guys have got on social media. We really appreciate all the feedback we've gotten, all the questions about specific stocks. We love taking them. Keep sending them to us. Keep taking a look at these videos. We really appreciate it. Thanks so much.